Welcome back, everyone. This is an update on the oil market. WTI moved higher in the past two daily sessions as the commodity continues its sideways motion that was formed in the past 2 months. The oil market remains in a rather subdued price action trend, yet traders could be on the watch for upcoming reports regarding the industry. This report will be looking into some of the most important drivers related to the oil market at the moment and how they may affect oil price activity. We make a start with the weekly US oil market data released in the past days, as it could indicate sufficient differences in production and demand levels. During the past Friday, the US Baker Hughes oil rig count increased from 183 to 189. This is the second consecutive week that active oil rigs increase, and the figures imply some demand is picking up. Furthermore, the American Petroleum Institute weekly crude oil stocks saw a minor surplus this week, just at 0.95 million barrels. The Energy Information Administration's crude oil inventories also released a minor surplus of 0.5 million barrels. In our opinion, the strongest among the pre-mentioned indicators is the oil rig count increase, and the news tends to support oil demand for the moment. A new storm approaching the Gulf of Mexico is currently in the market's focus. The Gulf of Mexico includes offshore Texas, Louisiana, Mississippi, and Alabama, and is one of the major petroleum-producing areas of the United States. Hurricane Delta is a dangerous Category 4 storm that is expected to make its way towards the Gulf of Mexico. Companies like Royal Dutch Shell, BP, and Chevron are said to be evacuating workers and reducing production, with the downtime most probable. The effect on prices could be felt in extreme circumstances, as the demand for oil remains on the low due to the COVID-19 outbreak. On a separate note, the EIA's short-term energy outlook stated that WTI production averaged 11 million barrels in July, much higher from the yearly low of 10 million barrels in May. The figures imply that demand has increased for the period, and it has been supported by higher prices. For September, EIA forecast that production rose to 11.2 million barrels per day, which could be also encouraging news. Yet, moving into the next year, EIA expects US crude oil production to drop and average 11 million barrels per day in the second quarter of 2021, as the existing wells could be sufficient to cover for the demand, not requiring new ones to be drilled. On a more general note, the slump in the demand for crude during the coronavirus pandemic has forced oil companies to contemplate the possibility that the fossil fuel market has peaked and the time for a global energy transition may have approached. Saudi Arabia's state-owned Aramco is looking to take advantage of the pre-mentioned notion by increasing production in an attempt to take over as much market share as possible and knock off competition. Western rivals like BP and Shell will be taking a different route by bringing down production costs and investing in renewable and green energy. As a closure, please note that the OPEC releases its 2020 World Oil Outlook today, the 8th of October, in the US session, and caution is advised. Those were the fundamentals for the commodity. Please stay tuned for the technical analysis. Welcome back to our technical analysis. This is WTI 4-hour chart. WTI is currently trading just between our R1 4150 resistance level and our S1 39.50 support level since the 5th of October. The levels we have noted higher above the R1 are the R2 4350 and the R3 45. Levels to the downside and below our S1 are the S2 37 and the S3 35.50. We must know that WTI is trading between our R1 4150 resistance level and our S2 37 support level since the 4th of September. If any of the pre-mentioned levels is clearly breached, that could be interpreted as a clear signal of direction change for the commodity's further price action. At the moment, and after the latest upward movement, the RSI indicator below our chart is currently running across the 62.5 level, confirming some bullish sentiment. That's the end of this report. We hope you enjoyed it as well as found it useful. Thank you very much for your time, and enjoy solid trading.